And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. It's nice, it's bright, it's early, it's 5:40 a.m. And the market is on a knife's edge right now. And here is what you need to know coming up. Again, for the past 30 days, we've seen everything unthinkable, every bad headline in the market you could expect. Stablecoin legality, Binance fraud, the U.S. Exchange staking ban, the Voyager liquidation, the ETH Shanghai withdrawals, and the coming Mt. Gox coins being released on the market. And I'll say it again, Mt. Gox repayments on March 10th, not likely to happen. Probably not. They're probably going to kick the can down the road again. And the $27 billion ETH unlock likely to be priced in, releasing the ETH, probably going to get bought up anyways. And what I want to bring our focus back to is this right here. And again, this is the setup we've been talking about. We had 5 drives of hidden bearish divergence on the monthly time frame. And I do want to bring up the 4-drive philosophy here, which I don't know if this is actually going to come into the screen. No, it's not. Here we go. I'm going to post this on our website here today, and hopefully this works out. Do I want to bring this up on... Let's see, what is this? Okay, this works. Boom. So the 4-drive philosophy on divergence. Okay, so 1 drive gets you a move to the 9 exponential, 2 drives to the yellow 21, 3 drives to the green 55, or the top side of the range or the bottom side of the range, and 4 drives to the 1618 fib. The ideal setup, we want to trade with the trend. Bullish divergence coming from a low level and bearish divergence coming from a high level. So, again, TA is not an exact science, it's more of an art form. And you do have to have an eye for this. So I'm going to point it out for all of you folks out there who want to learn more and more and more. And here's what I'm talking about. We got 5 drives actually here. 5 drives coming back from this pivot right here. So, and this has been working its way all the way through. We had the first 3 drives, which did give us a shot to the bottom, to the 1618. 4 drives did not quite give us the move that we're looking for. The 5th drive could be the very nail in the coffin we've been looking for. And for a quick move to the 1618, just to show you the confluence right here, you take the previous low to high on a bearish retracement using our Fibonacci tool, and that does line up pretty nicely here. Additionally, giving us some confluence here is going to be this right here. This is a massive ascending triangle, which we've had drawn out for some time now, and saying, hey, likely to get a move. Measuring this from the 50 percentile as it broke on the daily to the bottom side of the range, coming in at, call it 20,100. And these moves are going to be swift, and they're going to be simplistic. People really want to hold on to the bullish news. They want to hold on to the bullish narrative so bad that I think they're missing some opportunity here. And it's, we did call it out on this channel. The bearish divergence was confirmed right here on the 3-day time frame. Over a week ago, we talked about it and said very likely that was bearish and should get some continuation to the downside. And we did say, hey, let's wait for a daily closure below this guy. which did happen, 4 days ago. So if you didn't want to take it over here, you could have took it there. And we've said, hey, look, as long as Bitcoin remains below 23,160, that pressure remains on to the downside. So let's check out, just reviewing from yesterday on the Kobisi letter, what happened. Well, Jerome Powell spanked the market.
Yes. Higher. Quality of the data.
So essentially, the 50 basis point rate hike is now on the table, and this is the Fed Fool's rate chart, probability chart, whatever you want to. The target rate probabilities for the 22nd of March coming in now. There is a 77% chance of 50 basis points, 22%. If I can only talk this morning, 22% chance of a quarter basis point rate hike. Now, this has flipped from a month ago. There was a 90% chance of the 25 basis points and a 9% chance of a 50 basis point. Look how it's flipped. Look how the news, and he repeatedly said, look, we're going to be data driven. And well, more data just came out this morning in regards to economic data. We will have the job quits and job openings here in about an hour and 8 minutes. But bullish for the dollar here. Balance of trade. So balance of trade. Since 1976, the United States has consistently maintained trade deficits due to significant imports of oil and consumer goods. In 2018, the highest trade deficits were recorded by China, Mexico, Germany, Japan, Ireland, Vietnam, and Italy, while the largest trade surpluses were recorded by Hong Kong, the Netherlands, Australia, United Arab Emirates, Belgium, Brazil, and Panama. In the same year, China is the country's largest trading partner, accounting for 16% of total commerce, followed by Canada and Mexico. A higher than expected figure should be seen as positive or bullish for the US dollar, while a lower than expected figure should be seen as a negative or bearish for the US dollar. And that brings me back to something we were talking about on live stream last night, is the Triffin dilemma. The Triffin dilemma, which is a very interesting topic, which they don't teach you about in school. I wonder why. Excuse me. They wanted, the big bargain after World War II. We'll hold all your gold. The dollar is going to be the world reserve currency. And don't worry, we will hold trade deficits so that we have to buy goods from you, right? And that's been the story ever since, and likely to be the demise of the U.S. is our, our need to be the global policeman and to be the pusher of transgenderism. Yes, on Bloomberg, that garbage channel this morning, there was some lady talking about maternity leave, and we need to have same-sex marriages, maternity leaves for those same-sexers who are delivering babies, right? Those men who are getting pregnant. Is that even possible? Come on. Anyways, I hope you guys will, one, join our Discord. Two, check out our resource center here on bitcoinadvisors.com. Set up TradingView for free. You can go here to bitcoinadvisors.com. There's a link in the description below. And I'm just going to touch on this really quick. The Wall Street cheat sheet, the psychology of where we're at today and where we are. Comment below where you think we are. Um, you know, perhaps we're in this zone at anger? No. Depression? Maybe? No. I think we're still in denial mode. People are in denial of where we are at in the general economy. This is going to be the biggest liquidity grab in history. Here's what I'm talking about. Stocks doing the same thing they did back in 2008. They are doing the exact same thing. Dancing around the purple 200, bull trap right here. And again, if we, this is our target on the NASDAQ right here. We put this out about a week ago. Excuse me. Target coming in at 11,500. If that breaks, bottom side of the range, and probably continues from there. Dow Jones, we just broke this rising wedge to the downside and given us some big targets down. I believe this is the target we put out. I should just put a green horizontal there. Let's put a green one right on top of that white one. And let's just take a look at where that lines up pretty nice for a bull trap or a bear trap right there. I think I'm going to get rid of that line. And yeah, ultimately, that 26,255 level probably going to get hit. That would be a nice drawdown of another 20% from where we're at today. Easily that could happen. And ultimately, the COVID lows, March of 2020, probably where we're headed, somewhere in that zone right there. Okay. So, giving away some targets there. S&P 500 already came down to our initial target, which was this trend line, bounced off it pretty hard, and it looks like a bull trap to me. What is a bull trap? Well, the bulls get trapped right at the 618 fib, and look at that. Beautiful, beautiful rejection right there at the 618. And the dollar peaking up. And we did have the closure. I was just about to say this today, and I could be wrong, but this was our overall target. I mean, it took a long time. We confirmed it, I think, way back here and said, hey, look, bullish divergence, top side of the range, probably going to get hit. And then we confirmed it on the 2-week hidden bullish divergence, many, many drives. And I am looking at this as enough to send it up to the 0.5 at 107 at a minimum. And we did this kind of a closure, almost taken out this wick. Close enough is close enough. And based on the jobs numbers and the economic data that continues to come out, job openings and job quits. So let's see job openings. So if that number is higher than expected, meaning, we're hiring here at Bitcoin Advisors, right? We're adding more people. Despite the costs of high labor, we need more people. So, cheers to that one. Cheers to that one. Let's check in on crypto bubbles. So, Weemix getting smacked and Bone on the day up 21%. Matic finally coming down to my target here. Looking good for some downside displeasure. Let's check in on Matic and Bone. What is Bone? So Matic on the day, maybe it wants to just really get ripping down. Already down 5%. Could we do 10% down? That would put us. That was the original target. So I'm going to start highlighting some of the targets with the green marker. And what did we say that off of? Well, I believe it was the 5-day bearish divergence. Yes. coming back from this pivot right here. 1, 2, 3 drives gets us a shot to the green 55. Again, highlighting that 4 drive philosophy, which I'm going to put this in. I don't know why it came out in blue, but we're going to put a nice PDF right on the website where you can go and visit this over and over and over. Divergence on the RSI. So 1 drive gets you moved to the 9. So let's just kind of review this. 1 drive to the 9. Well, that got you. So 1 drive. 1 drive, this would have been the first drive. So again, marketing off here. Hidden bearish divergence. Oh, I need to put the other part on the chart. I'll put that up later. Hidden bearish divergence is when the price is making lower highs, but the RSI is making higher highs. So 1 drive got us a move to the 9, overshot that a little bit. The second drive, 2 to the 21, we definitely got there. And now 3 drives, a move to the green 55. So I'm gonna bank on that. We're probably gonna get a bounce at 106, actually, which is based off of the 4-hour consolidation here. So we did talk about this as well, I believe on the live stream. 106 is going to be this liquidity zone right here. Yeah. This is where I'm expecting a bounce. You see this wick, this wick, this wick, all these wicks in here. So probably going to put a bounce in right there. And that's pretty close to that green 55. I do like that for a bouncy area. And what else does it line up with? Well, that lines up with the... To be fair, we might get a bounce here first off the 1618, but the second target actually down is going to be 105.45. And I think we could get a nice little wick down there for a nice bounce. But again, as soon as it gets over 20%, trend momentum and volatility. Can I talk? And yes, you do have multiple drives here. So do I want to change that to 105? I have it at 106.13. Close enough is close enough. 106.13. And yes. I like it. So that's it out of me today, guys. I think I've rambled long enough here. We're going in. Economic data coming out, job openings, imperative. If this comes out higher than expected, but you notice the Fed's speech is going to go at the same time these numbers come out. So do you think Powell's going to say, oh, maybe we're going to do a 50% rate hike today? I don't know. But you can see gold is putting in a little bit of a low here. Acting inverse to the dollar. Gold dancing around. Again, this is our target on gold for a little more downside. Silver target overshot. We didn't call that one out. Silver getting shot in its face. And let's check out palladium. Palladium futures dancing around the last line of the Mohicans in the sand here. You know, really, I guess the bottom side of the range would be here. You know, somewhere in this zone. On the weekly time frame, yes. Essentially, we don't want to see this zone lost. Well, you got the death cross there. Death cross looming, so maybe we get one last bounce, retest the breakdown area, and then shaft it down. Palladium has overstayed its welcome. All right, that's it for today, guys. I hope you have a blessed and highly favored day. Ethereum probably going to do whatever Bitcoin does, and probably going to make contact with this trend line. And the more that I look at this massive, yeah, this one's going to come down as well. Why do I say that? Well, Let's look at the 2 drive philosophy. Is it 3 drives or 2? Close enough is close enough. Coming back from here, you would have the 5 drives. So a little bit of hidden 1, 2, 3. So you can see these are all. See this high right here? 1, 2, 3, 4, 5. Ooh, this is on the weekly. So confirmed an even more bearish idea. So from this pivot right here, you've got 1, 2, 3, 4, 5. Where would it be confirmed if you front run the signal? A lot of times, Ethereum has shown itself to be a little bit stronger than Bitcoin. Did not check out the June lows, the June 2022 lows as Bitcoin did. And there is going to be bullish divergence on the other side. So let's see where the minimum target for Ethereum, coming down to this level right here. Put a nice horizontal on there. There's one guy tracking my predictions now. I look forward to hearing from you. So green box of peace and prosperity and death and despair. What else does this probably line up with? Well, what do you know? The 618 fib coming in here. So somewhere in that zone, that would probably be a decent buy on Mr. Ethereum, 1390. Okay. I'm going to leave it off there, guys. Hope you have a blessed and highly favored day, and we'll check back in tomorrow and see if Powell spanks the market and see what other economic data is going to come in tomorrow. I remember we had a pretty big week this week. What's tomorrow? Let's refresh. Sir, tomorrow's economic data. Jobless claims. So that's coming in. And then Fed Barr's speech. Barr. And that would be Thursday. Do you have anything on Friday? The 8th. JOLTS numbers coming out in 52 minutes again tomorrow. Tomorrow we are going to get the non-farm payrolls, unemployment rate currently at 3.4%. And Elizabeth Warren did smack Powell a bit because he basically said, we want unemployment to go up to 4.5% and to put another 2 million people out of work. Yes, do it, pal. Put those people out of work. All right, take care, guys. I'm moving on with my day. Take care.